please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Good afternoon. You're with us here on a fresh new edition of Midcap Radar. 33 points on the Nifty. 10,582 is where we are. So that's basically an improvement of about 10 or 12 points in the last, an hour. But the market's almost at the day's high. Let's see if it can get a further push. Bank Nifty is up 0.1, so it's worse off as compared to the Nifty. The mid-cap index, the small-cap indices are at par with about 1/3% gain. Advanced decline is pretty much even keel, 1,050 stocks higher and about 1,000 stocks lower. With me is my colleague Rima. Rima, afternoon.
Hi Prashant, afternoon. Grinding higher for the 10th straight day now for our own market. So a gain of about 0.3%. Key gainers include an ICICI Bank, so that's moved up by nearly 1% in the last few minutes. Eicher Motors has seen a spike up, so from the red it's now back into the green territory. Bharti Airtel has been a big mover, perhaps on the news surrounding its tower business. ITC has been a key contributor on the upside, and gains also seen in Cipla, which has rallied nearly 7% this entire week.
We've got Ashwani Gujral on the show. Ashwani, thanks very much. So, I mean, moving higher, I think last we spoke, you were saying that, I mean, if you're short, you should get out. I mean, you should cut your shots. But yeah, is it getting any better from here is the question.
It looks like it's getting better because Nifty is trading at the highs of the day. And if all day you are consolidating and towards the end of the session you start moving up, you know, that often qualifies as a breakout which is sustainable, because you know the second half generally institutions and bigger players tend to participate. So the market has been trying to go down from 10,550, 10,600, but so far it's not been successful. So my sense is going to the close there could be a bit of short covering which could take the market higher. So as of right now, if you have to take a trade, that's buying on Nifty as well as Bank Nifty, and maybe you could get 100 odd on the Bank Nifty, maybe 30, 40 on the Nifty. So that way it's a positive. The way consumer stocks are moving, FMCG, etc., I think a fresh bull market is starting out there. And today the fresh movers are ITC and Dabur. So Dabur is a buy with a stop of 350, target of 364. ITC is a buy with a stop of 274. Target of 286, and Bombay Burma is a buy with a stop of 1350, target of 1390.
ITC has crossed its 200-day moving average, and plus they have a hospitality chain which is doing quite well.
Yep.
So with the up move that we've seen across the rest of the hotel stocks, ITC too could be benefiting from that. Ashwani, anything in the NBFC pack? They've started moving with further strength. And Exide and Amara Raja, let me add the two battery names. They too are on the front foot.
See, Amara Raja is something which is now moving higher from its 200-day moving average. So maybe in the days to come, we could look at levels of 910, 920 on NBFCs. I think Bajaj Finance, DHFL, etc. All of these stocks are now looking up because overall, you know, the rupee has declined. So that way, the rupee has appreciated from morning lows. So that way, that's propelling the financials higher. Similarly, Exide, both the battery companies are moving up. So overall, I think the leading group is consumers, but all these side sectors are also now participating.
Okay, Ashwani, thanks very much. Appreciate you joining in. We speak with you on the top of 2:30 in an hour's time once again. So that's basically calls coming in from Ashwani. Look at what is happening once again for the second day running to these hotel names. I mean, put up these stocks, Taj GVK. It's, I think, up another 14-15%. You look at EIH Associated. So that is 8.5% higher. Then I saw a couple other smaller names. I think Advani Hotels will come up on your screen. I think they run a hotel in Goa. So that was, I mean, all kinds. Yesterday we had about 7 or 8 of these hotel stocks which were up between 10 and 20%. I mean, it's not that widespread, but yesterday also the action picked up in the last hour and a half of trade. I mean, Lemon Tree, of course, is one of the largest hotel chains in the mid pricing category, and that is at about 70 odd rupees. I mean, Lemon Tree, Rima, in terms of hotel rooms, number of hotel rooms, actually I think it's pretty close to Indian hotels. Indian hotels is about 16,000 odd rooms, 17,000 rooms, and Lemon Tree is not very far away, but of course they operate in different categories, different segments.
Broadly, it's the consumption theme which is doing well, and in that there is a lot of sectoral rotation which has taken place, and off late the big theme has been the hotel stocks which have done well, but all comes under the broad consumption bracket and the improvement there. But we're also looking at Mindtree. That stock actually has lost ground from the top of the day. In fact, it's seen some profit booking from record levels that it had hit earlier today. Numbers will be out post market hours. Remember, it is one of the best performing IT stocks. It's outperformed the IT index by close to about 30%, and with that, it's trading at premium valuations. Its FY20 PE is close to about 19-20 times versus an average of 15 times. Now, with respect to the key expectations, dollar revenue growth is seen at 4%. The company in the conference call had already indicated that Q4 growth will be similar to Q2 and Q3, which is between the 3 to 4% bracket, and they indicated that margins will be flat sequentially, so around the 15% mark, and according to our poll, profits could be higher by 4%. The key factors driving optimism on Mindtree: one, Q3 performance was very strong, a beat on all parameters. Since then, the stock got re-rated, but the client-specific issues which plagued the company in FY17 now seem to be behind it, with their large accounts growing quite well. Their EBITDA margins have improved by 400 basis points in 2 quarters, and analysts believe there is scope for more, considering the peak valuations are a lot higher at over 20%. Digital revenues are 44% of their portfolio, growing quite well. The only place where the street wants to see an improvement is the new deal wins, because in Q3 it was absolutely flat, no improvements seen on that. And of course, keep your eye on management commentary on the outlook as well as the margins. Staying higher on the benchmark indices, so now it's again for the 10th straight day. The stock which is currently on our radar right now is Virenchi Limited. That's buzzing in trade, a gain of about 10%. The company signed a multi-product contract with Advance America for a period of 5 years. Satyajit Prasad, the CEO of the company, joins us on the phone line. Good afternoon, Mr. Prasad. It's a 5-year contract with Advance America, but can you tell us the size of the deal?
We have been serving Advance America for their existing 1,200 stores. And one of the major increases that has happened as part of this deal is that we are going to be serving 2,000 stores, more than 2,000 stores from 1,200 centers that they have currently, which pretty much means is that all of their operations in U.S. We'll also be serving their online lending practices, and this also gives us a greater geographical footprint as far as Q funds coverage is concerned. So pretty much, I think, this, and the thing which works around this is about, in 5 years, we are looking at about 275 to 280 crores of top line coming out of this deal.
Okay, so you're looking at revenues of 275 or 280 crores in the next 5 years. But Mr. Prasad, if you could just clarify, will that be the total revenues from this deal, or is this the incremental revenues on account of servicing more stores?
It is the total value of the deal. And other than revenue in terms of earning, the EBITDA part would be about close to 40 crores over 5 years would be the incremental EBITDA. So we are going to look at on an average of about 7 to 8 crores of EBITDA per year, which is a little more than 10 or around 12% from our EBITDA that we had reported for last year.
Okay, you're planning to launch something called a V card. Could you talk about that? I mean, what is the expected launch, and have you got all approvals?
Yeah, I think it will be too early to comment on the launch date. It is something which is in progress. We should be able to get back on that very soon.
But roughly by when should this hit the market?
Yeah, so I think it is something which is, in the pipeline. So we are looking at least maybe another 1 to 2 quarters by the time where we should be ready to launch out there in the market.
Okay, for the benefit of our viewers, V-Card is a downloadable UPI beam-based instant settlement credit card. So basically, a financial services platform will be provided by Virinchi Technology. You're saying it's in progress. It could take 1 or 2 quarters. Which regulatory approvals are still awaited?
Yeah, I think those are the details which we would want to get back to you once we are past those approvals.
Okay, so Virinchi Limited right now has 2 sources of revenue. One is your IT services and products, and the other one is your healthcare or hospitality business. Now, if I look at the company's performance in the first 9 years, X of the healthcare vertical, the revenues are only up about 4 to 5% in the first 9 months of FY18. Any particular reason for the subdued growth in IT services and products?
No, I think, that's something which should be compensated with, the deal that we just announced. And we also were in a phase where we were investing into our products. So you're seeing the returns from that investment right now. We should be seeing more of such, effort coming out very soon.
Mr. Prasad, for healthcare, could you tell us what are your plans to scale up in that business?
Yeah, I think, the growth plan would be pretty much on where, we are consolidating on our hospitals that are out there. And I think, the margin should be once these hospitals are completely operating to their maximum, we should be seeing better margins coming out from there.
Okay, I think we got that. Mr. Prasad, thank you very much for your time. Appreciate you joining in with some of those details. So that is Virinchi there with perspective. Shots and pictures of Prime Minister Modi there. And we'll have more on that in just a bit, but those are just pictures which are coming in at this point in time. 41 now on the Nifty. So that is Theresa May and Prime Minister Modi sitting down together. So, and essentially a photo op. So we'll focus on that in a bit. But I just want to highlight before we take another quick break here. So we were up, 30 points when we started. We're up 40 now. So it's inching higher. Advanced decline is still absolutely evenly matched. 1,050 higher and 1,004 odd stocks lower. So it's as close as they come. And Bank Nifty is not really picked up. And the mid-cap index is still there. So, actually, large caps are doing the best at this stage. Almost 0.5% of the Sensex and about 0.4% on the Nifty. So, that is what is coming in. I think there are some flashes at the bottom of your screen. So, this is the RBI Deputy Governor. I don't know where he's speaking, but he's saying default is a lagging indicator, not a leading indicator of financial stress. Bankers need to be proactive before borrowers become stressed. Fair enough. And I think there was this one flash about 180-day sort of resolution period as well. He's defending the one-day default clause of the Feb 12th circular, which actually is coming in. I think we'll have Lata join us in just a bit from this. Feb 12th circular doesn't need unanimity, was it? I missed that. But he's basically defending that one-day default clause of the Feb 12th circular. I mean, that generated a fair bit of controversy. I think we heard from government sources about how this might be changed, etc. And he's defending the 180-day time which is given for any resolution under the IBC process. So that is essentially more on the bankruptcy story, which of course dominates news flow nowadays.
Now see the Bank Nifty reacting negatively. There was a lot of call from the markets and the lenders perhaps to junk that one-day clause default. But looks like the RBI Deputy Governor has poured cold water over those hopes, at least for now. Lata, you want to come in?
Yeah, actually, it is a 15-page speech, and I'm only through 10 pages. So I just thought I would come in and identify the 2 important points that have been made and which you all have just spoken about. The first point is that they are in no mood to change that one-day default. And I think it's explained very, very well. The point they are making is if you were had raised money in the form of a bond, then the day you default, the bond is downgraded and your yields jump and you have to pay higher interest on the next bond that you borrow. Or whoever is holding the bond, the yield goes up. Likewise, when the bank also gives you a loan, on the first day you default, the banker doesn't get that advantage. It doesn't have the same category, the same status as a bond default. And why should that be? Ultimately, who's being cheated? It's the depositor. The bank has a license and it takes depositors' money. So ultimately, the depositor is put on a lower status vis-a-vis the bondholder. Why should that be? And that is why we have that one-day default. So, I mean, I think it's going to be very difficult to argue against this. They're placing the defaulter on the depositor on the same
as the bondholder.
Category as the bondholder. And therefore, we need to take that point on board and not just ask for, give us 30 days more. Why? When you know that your payment is due on, whatever, the 19th of April or whatever, you better make the payment. You make it to the bondholder. Why don't you make it to the depositor as well, who is put his money in the bank? The other flash is very important, where he says that we never ever asked for unanimity. One of the things bankers were saying is that under the JLF model, only a majority of the bankers had to agree to a resolution plan. Now he says there is a chatter that the new framework mandates unanimity across lenders, but the fact of the matter is the exact opposite. We are not asking for unanimity. In fact, we are not asking for anything. So long as you restructure the loan and get it independently valued, we have no problem how many people have agreed to it. Now, if there is a disgruntled banker over there and he drags you to court, he anyway drags you to NCLT. It's not that we have mandated it, that the law itself allows. So this sounds a little ambiguous to me, but basically what the Deputy Governor is clarifying is that the February 12th circular did not require all banks to agree to a resolution plan.
The IBC though said what, 75%?
In IBC, in the NCLT, yes, only 75% of the committee of creditors have to say yes. If the 75% say yes, so basically that might be the way in which it will work even before it goes to NCLT. If a set of banks know that they are in the minority and they will anyway not get by, they may just, agree. So he's saying that we did not ask. I really have to speak to a banker. I hope our team is able to fix a banker on this issue. I guess they would not have all read the speech. But basically he's saying our rule, our February 12th circular does not require unanimity. That may come as a bit of a relief, but how much of a relief it is, we really have to ask the bankers. The tone of the speech so far, the first 10 pages, indicate that the Reserve Bank is not going to change anything. It has changed the interpretation of the unanimity clause. It is not going to change the one-day default for sure, nor is it going to give you 180 plus 180 or anything of the kind. They expect you to solve the problem in 180 days. And in fact, what the Deputy Governor says is, and one of those lines will tell you that default is the final, evidence of stress. It's a lagging indicator of stress.
But what is that in context of?
Because everybody is saying you are giving us only 6 months. What he's saying is you should not have begun the resolution after the default in the first place. You should begin the resolution process much before, and for that they have given in the appendix, they've annexed a set of conditions which indicate stress, working capital cycles are lengthened, or EBITDA is beginning to show fall below interest, or
who's written the speech?
This is NSV, NS Vishwanathan, the Deputy Governor, who is in charge of, who's the February 12th circular is his baby, really. So if it's coming straight from the horse's mouth, don't expect any rollbacks, and he's also interpreted it more widely, and maybe bankers will be happy about it. But I think we have Krishnan, ASV, the analyst at SBI Caps. Krishnan, the clarifications indicate that nothing different is coming from the Reserve Bank, no dilutions or rollbacks. They've defended the one-day default as saying that anyway, one-day default for the corporate bond is punished. Why should it not be for the banker? And secondly, that they have not asked for unanimity of bankers in resolving an asset, a stressed asset. Your comments?
Yeah, hi.
Do you think this will mean faster resolution of assets? What's your first reaction?
My sense is, practically there is a challenge here. I think, I think the ask of the banking sector as well as rating agencies was probably that you allow, there are accounts that tend to self-regularize after a brief delay. A lot of PSUs are also at times, deliberately delaying one lending obligation. So, I think what bankers were essentially requesting, or rating agencies were essentially requesting the Reserve Bank of India in this case, was around getting them to get rid of noise. Right? Otherwise, the ratings volatility will be fairly sharp. Right? You're right in saying that when bondholders, when they have a right to be, repaid.
When they demand payment on time, why should the depositor who is loaning to the same guy not demand repayment on time?
The bondholders are unsecured, right? Very often, banks have a very limited ability to do unsecured lending. Ideally, that level should be on which they can't do unsecured lending.
What are you saying? The banker has... I don't think bankers always have too much collateral.
Okay, so I'm just saying that's one big distinction that you have between bondholders and lenders, financial writers to be.
Okay.
And more importantly, this 180-day versus, whether it could be a bit longer was also around, not having that sword hanging over you and then coming up with suboptimal resolution plan, right? To be very frank, the number of accounts that need help right now, that need resolution plans right now, is quite a lot, right? And if you have to devote, time towards resolution plan for each of these accounts, unfortunately, with a 180-day deadline hanging over you, you will probably discard some at the suboptimal stage.
Okay.
Yeah, you will not think through logic for each of these aspects.
Okay.
So I think from a practical perspective, maybe this ask was relevant.
Okay.
Now, obviously, the Reserve Bank of India has had its say in terms of what.
But the ask, if it was 180 plus how much? 270 days?
I think it was
360 days?
I think the ask was probably keeping it within reasonable time-bound limits still. I don't think, anybody ever wanted, a stage where you have open-ended resolution timeline. But whether it is 270, whether it is 360, I think the ask was more around just giving you a little more breathing space, just to make sure that you can do justice to each resolution plan. Otherwise, clearly bandwidth was a challenge. Having said that, the Reserve Bank of India has had its say. I agree with what the Deputy Governor is also putting out. That, there is the lag indicator in terms of default.
No, actually, the Deputy Governor's main thrust has been that, don't confuse the stock of bad loans with the flow of bad loans. In the stock of bad loans, anyway, you have not resolved the problem all these days. We are giving you 6 more months. And in the flow, why do you allow it to accumulate? Why do you allow it to become such a large stock? Since we have forewarned you, you ought to be alert even before the loan becomes default.
Yeah, so agreed. So all I'm saying is whether these large corporates that you're monitoring over a period of time, whether you have a vantage point where you can actually look at lead indicators of distress, which is essentially escrow account, cash flows into them.
Basically, you're a bit disappointed that nothing has come. Is that what I should gather from what you're saying?
I'm saying it's probably not practical right now.
Okay.
I wouldn't say good, bad. I think obviously we now need to brace ourselves for whatever rating volatility it brings in. Right? So with Reserve Bank of India's norms as they stand currently, I think there will be greater ratings volatility. So
till the system adjusts to the new rules, I assume. Krishnan, we also have Ashwin Parekh who has just joined us. Mr. Parekh, this 15-page speech broadly indicates that nothing is changing in the February 12th circular. The defense of the one-day default is that, after all, the bondholder also, imposes one-day default. Why should the banker not impose it? And likewise, we are not asking for unanimity in resolutions between banks. So long as there is a credible resolution plan, it can go even without unanimity. Your thoughts on the Deputy Governor's speech?
Yeah, the first, important part is, see, when you're getting a clear sense that the regulator is trying to get, clean up the accounts and the financial statements of the banking system as much as, it's necessary. So, and that's the reason why there are these provisions on, there are these regulations on provision, there are these regulations on default recognition, stress recognition, and the distinction between the two. But somewhere along, we must realize that, the regulator's perspective is, I think, very valid to the extent of saying that when you say that something is half true and fair or partly true and fair, then it does not really reflect the correct financial position of a bank. That cannot be halfway to the trueness and fairness of the financial statement. So, from that perspective, one has to agree that there is a validity in this particular part. But at the same time, let's recognize that there is no market for these assets on one side, and B, if you accumulate a lot of these assets, and then there are no buyers, on the other side, whether it is 180 days on the other side, to resolve, or whether it is anything more will depend, basically on the buyers and the assets available, for the assets which are there in the system. Different sectors, as I've said so many times, will have different sets of buyers.
Yeah.
Maybe we find some excitement in
that situation is not going to change whether you give 270 days or how many ever days. It's better to recognize them as bad, and if there is no buyer, let it go into liquidation. Is not that a sensible way of handling?
See, the sensible way, I agree. The liquidation is a very sensible from the argument that for the nation, the asset becomes available to the next buyer, and then he can put it to economic use. That was the whole IBAC NCLT kind of reform for, basically. So that is very valid. But somewhere along, we'll have to recognize then in that case that the banking system will have to take real hard haircuts, basically.
Yes.
And that kind of capital will have to be really made available to the banking
All right.
system.
Well, take your point. We will have to continue this discussion later. Thank you very much, Ashwin Parekh and Krishnan, for joining us with your first thoughts. Okay, we have someone who was a banker until very recently, until a few days back. We have Sunil Srivastava, former Deputy Managing Director of State Bank of India, joining us. He was in charge of stressed assets, so should be best placed to answer this. Sunil, I don't think there are any changes coming. The Reserve Bank says that by announcing, okay, I think we don't have Sunil with us just yet. Maybe we should go to a break.
Okay, we'll go into a break. Before that, just pull up the PSU Bank Index or even the Bank Nifty. There has been a slip after cold water has been poured on all those hopes that the Fed...
Even the market has come off, Rima.
A tad bit. I think it's dragged down
when the news hit the screen. We're down 20 from that point. And the Bank Nifty, of course, as you pointed out, is also... actually, that's
dragging
almost
0.4,
0.5% lower from that point.